During the time that they are reviewing your offer, they may file a notice of federal tax lien. If you're not familiar with that, you can check out an episode where I cover it in more detail, okay? Just so you understand how that's going to actually impact you. I've also written an article about it just in case you prefer reading over listening to me. The IRS will suspend other collection activities. So while we are waiting for this offer to be processed, they are not going to levy you or do anything else. Like, they're not gonna garnish your wages, levy your bank account, that type of enforcement activity, okay?
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 49 of the Tax Relief with Timalyn Bowens podcast. Today, we're going to do part 2 of the two-part series we started last time when we started talking about the offer and compromise. So, in part 1, which was episode 48, we talked about what is an offer and compromise. And if you remember, I shared with you that there are 3 different types of offer and compromise. Because we have limited time, in today's episode, I'm going to talk about how to qualify for an offer and compromise and also how to apply for it. I'm only going to be able to cover the offer and compromise doubts as to collectability. Okay. Now, with that being said, let's get right into it and look at what is the IRS considering when you apply for an offer in compromise? Okay. And keep in mind, an offer in compromise will allow you to settle your tax debt for less than the full amount that you owe, but the IRS is not going to accept every offer. That's why it's very important for you to understand not only what it takes to qualify, but the formula that the IRS is going to use. Now, as you're following along with me today, I do also want to let you know that the IRS does have a pre-qualifier tool on their website to help you put in the different things that they look at. Okay. So the 4 things that the IRS is going to consider that you can enter into the pre-qualifier tool are your ability to pay, your income, your expenses, and also your assets. So, when we're looking at your ability to pay, they're going to take things into consideration such as how old are you, right? Because a person who is near retirement is not going to have the longevity in their career left to be able to pay versus somebody that may be in their 20s, right? They're going to also look at your medical condition and history. Do you have some type of disease or condition that would prevent you from being able to be out into the workforce and to continue making money in the future? Do you have a mental disability, right? All of these things are going to be taken into consideration as well as your education. They're not gonna be as lenient with somebody who has a PhD in, let's say, engineering versus somebody who may not be college educated. All of these things are gonna factor into your ability to pay. Now, with income, that's pretty straightforward. We're gonna be looking at earned income and your passive income. So your earned income, of course, is going to be anything that you are actually going out and you have to take action to make that income. So let's say you're a musician. If you get paid for the different sets that you play on or the different scores you produce, that is going to be earned income. If we have somebody that's an author and you get paid, even if it's royalties for books that you've published, those royalties are still based on something that you did to be able to earn them. So we're looking at that income, even though you may not actively be working to receive it right now. They're going to also want to look at any type of investments you have. So if you're receiving dividend income, right? Retirement income, all of that's taken into consideration. And when we say they look at your expenses, that doesn't mean that every little thing that you're paying for is going to be allowable in their sight, right? You may submit an offer with expenses and they say, well, you're living way above your means and we're not going to accept this offer unless you raise the amount that you offer, right? So it's very important, as I've mentioned in other episodes, you want to make sure you are using the national and local standards that the IRS puts out to see what they already deem as acceptable for your age, your location, and what you're making, and your family size. Now, with assets, this part can be tricky because just because you have assets doesn't mean they won't accept the offer. It all depends on the equity that you have in the assets. And if you're not familiar with what equity is, that's how much ownership you actually have of the asset. Because let's say that you went out and you bought a $30,000 car, right? That asset is $30,000. But if you've only made, let's say, I don't know, 10 car payments on it, right? Let's say you have a pretty low car payment compared to what people are getting now, and it's only $300. That $300 times the 10 payments you've made is $3,000. So let's not factor in interest for the moment. You would have roughly $3,000 worth of equity in this $30,000 vehicle. So yes, they're looking to say, "Hey, you have this $30,000 car," but because you don't have that much equity in it, even if you sold the car, you wouldn't have anything left to pay the IRS with. Okay? That's the kind of stuff that we're looking at. Now, your ability to pay that car loan would be called into question. So, before we even put in your information to see where you fall with the ability to pay the income, expenses, and asset equity, those are things the IRS is gonna look at even if you are looking to set up some type of installment agreement. So you'll wanna fill out the Form 433-F, which we've talked about in other episodes, to see where you fall and how much disposable income you have left. Now, if you're doing an offer in compromise, you do need the 433-A OIC or Form 433-F OIC. But again, before we even get there, let's confirm that you're even eligible to put in an offer, okay? So, first of all, you have to have all of your required tax returns filed. So, typically, this is going to be the last 6 years worth of tax returns. If you are an employer, you also need to have all of your 941s filed. These are going to be your payroll tax returns, right? And your 940. That's the FUTA form, the federal unemployment tax. Okay. You also need to make sure that you have all required estimated payments in. This means that this problem isn't going to continue. We need to nip it in the bud to make sure that no taxes are going to be added to this balance. You can't be in an open bankruptcy proceeding. If it's tax season, like it currently is, you need to make sure you have a valid extension for the current tax year if applying for the current year. So, if you don't fall into the category where you have all of your stuff done before even picking up the booklet, you need to make sure that you get the tax returns filed, you aren't in the bankruptcy, and you have everything current. Now, after that, and I said 433F earlier, I apologize. You need the 433A OIC. You'll want to work through that 433A OIC to see what your disposable income is going to be at that the IRS is going to take into consideration. Okay. After you have Form 433A OIC completed, you want to make sure that you have attached all the required documentation. So, anything we need to substantiate the expenses that you have, let's say, for example, your mortgage, then you will want to include your mortgage that shows the mortgage payments that you have to make, as well as where you are currently on those payments. If you are turning in a lease to substantiate the fact that you are paying rent, you will want to turn in a copy of that lease and then also show proof that you've actually been making those rent payments. Okay. Next, you'll want to complete Form 656B. Now, if you are listening to this in 2024, you want to make sure that you have the most up to date version of Form 656. The latest version came out in April of 2023. So, Form 656B is the offer and compromise booklet. Whenever you're listening to this, make sure that you have the most up to date version of the booklet because they may even revise it next year. Okay, so always double check that. In addition to the 433A and the documentation that you need, you'll want Form 656B. There is a $205 application fee unless you meet the criteria for the low income certification. But for the majority of people, there's that $205 application fee, which is non refundable, by the way, because this is going to cover the administrative fee to process your offer and compromise. And then you want the initial payment for each Form 656 that you are submitting. Okay. So when you're making these payments, please note that I said them separately. So you need to have a separate check or money order for each. Your initial payment is going to be a separate check from the $205 application fee. Okay. Now, with this, while the IRS has everything, your non refundable payment and fee are going to be applied to the tax liability. Okay. Now, if you would like, which I recommend, you can designate payments to a specific tax year and tax debt. The reason for this is you may not find out if this offer is accepted for 6 to 9 months. If they reject it, you want to have the power to say, hey, this is where my money is going because they're going to keep that money. Okay. During the time that they are reviewing your offer, they may file a notice of federal tax lien. If you're not familiar with that, you can check out an episode where I cover it in more detail, okay, just so you understand how that's going to actually impact you. I've also written an article about it just in case you prefer reading over listening to me. The IRS will suspend other collection activities. So while we are waiting for this offer to be processed, they are not going to levy you or do anything else. Like they're not going to garnish your wages, levy your bank account, that type of enforcement activity. Okay? Now, here's the downside if they don't accept it. Your legal assessment and collection period are going to be extended, which means your CSED, if it was about to expire in 9 months, you are going to add on to that however long it takes for them to process this offer and compromise. You do need to make all required payments per your offer during the time that they are processing this. For example, you have two different payment options. You have the lump sum cash, where when you send in the offer, you pay 20% of whatever you were offering. Okay? You must pay the remaining balance due on the offer in 5 or less payments. If they accept the offer, you'll receive written confirmation. But in the meantime, while you're waiting for them, you need to make sure you get those remaining 5 payments in. Now, it can be less than 5, but 5 at the most. Your other payment option is periodic payments. So when you submit your initial payment with the application, You're going to continue to pay the remaining balance in monthly installments while the IRS considers your offer. If they accept the offer, continue to pay the monthly until it's paid in full. With this option, you only have 24 months. Okay, so it's not like 72 months with the streamline agreement. Okay, and it will still have to be before the CSET is up. With that, like I said, you have to make sure that you're making the required payments because your failure to make those required payments, even if they were going to accept the offer, takes everything off the table and then you're back to square one. Okay. Now, you don't have to make payments on an existing installment agreement. So while they are looking at your offer and considering it, you're going to act as if the previous installment agreement does not exist and only make payments that you have made in the offer. Okay. I'll say that again. Let's say you have an installment agreement, the payments are $500 a month, but now you've submitted an offer. You are only going to make payments that pertain to the offer. You are going to act like the installment agreement with the $500 a month payments does not exist. Okay. The last part here that I want to mention during the process is that your offer is automatically accepted if the IRS doesn't make a decision within 2 years of the day that they receive it. This is another reason why it's so important for you to mail things to the IRS as certified, because whatever date you have on that certified mail receipt as to when they accepted it, that is when the clock is going to start. Okay? Now, that was a lot. But you don't even have to go through this process if you don't actually qualify to submit an offer. That's why it's very important for you to take a look at your financials and look through Form 433A or 433F, 433B if you're a business to see, is the amount that I want to offer the IRS something that they would even accept. That's why I highly recommend that you work with a professional that handles these kind of things day in and day out, because this is a very specialized area of tax law, and doing an offer in compromise is not something that I recommend doing DIY. And you all know I never judge anybody's tax competency, but this is the exception to that rule. All right. And if I wasn't here for you, I wouldn't tell you that. Because remember, I'm here to fill the tax literacy gap one taxpayer at a time. Let's say that you are one of the few people whose offer is accepted. You must meet all the offer terms that the IRS has listed in Section 7 of Form 656. Okay. This is in addition to all of the filing requirements of your required tax returns and making all the payments. The IRS won't release the tax liens, if you have any, until your offer terms are satisfied. Okay. Now, certain offer information is available for public viewing by requesting a copy of a public inspection file. So it's not like a notice of federal tax lien where, you know, you just Google it and then you can see who has a tax lien at the clerk's county office. People have to take a step further to get this information, but just FYI, part of your offer information is available if people know how to request it. So again, I know that was a lot in a short span of time, but please, 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 if you are considering submitting an offer in compromise, work with a professional. I would love to see if you're a good fit to work with me. You can book a call with me at www.bowenstaxsolutions.com. But even if it's not me, make sure you get the help you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.